Something very interesting is happening to euro/Japanese yen. First off, read this disclaimer carefully. This is certainly in the forex market, euro/Japanese yen. Here you can see the distance from 52-week low and 52-week high. If we go first here to the seasonality, okay, so the things that when I analyze the charts here, I have euro/Japanese yen, but on stock charts, in order to get the seasonality, I had to get Japanese yen/euro. But the key thing here is that there is some very strong seasonality for, the November, December especially period. It is the weakest time historically for the Japanese yen, meaning the Japanese yen tends to weaken very significantly here against the euro in this period, because this is the percentage of months in which the Japanese yen euro closed higher than it opened. Okay, which means in this case that would be seasonal strength for the euro. Okay, remember of course to like, subscribe, share and comment to gain access to all the market beating research. If you look here at the charts, let's get the big picture first, because we can get a very big picture here with the charts. Huge giga picture. So in the giga picture, well, let's actually go like that. We can see that there are some trends all of a sudden. And one of the things I like to look at is, the stock market. So here we have the dot-com bubble in the 2000s. So during this period, you saw here that the euro actually weakened. But then you have, the later part of that bubble, you did see the euro strengthen. Let's now go to the financial crisis. So this is, around here is the financial crisis. You can see here that when the financial crisis really accelerated, the euro weakened significantly against the Japanese yen. And it continued to weaken actually way here into 2012, which it was, because the bottom of the financial crisis was around, 2009 March-ish. Hence it is interesting to see that relationship. Anyhow, you see that there's been some rallies in the euro. And one of the things that is quite clear is that this pair recently has moved in these big cyclical patterns. So a cycle pattern, we have looked at it before. It consists of these, the security moves in these waves, as you can see, up and down, up and down. The thing is that during a very strong trend, like here you have a very strong uptrend, you still have cycles within it. It is just that during a very strong uptrend, the pullback cycle is just going to be way smaller than the rising cycle. Hence it kind of gets, swamped. And during a very strong downtrend, you will have, you can have a rising cycle during a downtrend, but it will basically just manifest itself as a dead cat bounce. But it is very interesting though that after this very strong trending market, like bearish, super bullish, super bearish, now there's much more of an even relationship between these currencies. The bulls have strong gains, but the bears also have it. So there's been a change here in the market dynamics. Very much so. Given that we have had these very clear cycle patterns, you could make the case, a speculative case, that we are now entering a rising cycle. And given that, the seasonality suggests that the coming months, historically, looking at the last 20 years, they are usually bullish for the euro. The euro, it usually strengthens. That also pushes us towards the more bullish side on top of the cycle patterns. If you look here a bit at, the some other indicators. Let's look a bit at RSI. If you look here at oversold levels, it seems like the lower band of the RSI, it is rather consistent here as a speculative buying level. You also see here that this pair doesn't like to be overbought either. But it seems like oversold levels have been more tradable as signals. Looking at the correlation, there is a 65% positive correlation. Okay, now I need to change this to the SPY, S&P 500, because now we got the correlation with the save. And now we have the correlation with the SPY, S&P 500, and there's a minus 43% negative correlation between this pair. And that is interesting. If you want to build, a more market neutral portfolio, you know for a fact that scientifically this is the relationship. If the relationship between the S&P 500 and this pair was, let's say, minus 99, it means that they basically move opposite each other. So looking at correlations is very, very important. Let's now jump into, let's zoom in a bit, see some other patterns. This right here, boom, boom, this is a double bottom. And you can see that there certainly was follow through. And in the Forex market, you can get huge leverage, hence this move, which was, so far it's been, 8%. That sounds minuscule, but when you can get like 500 times leverage, then it can become quite significant. Price action is currently squeezed between the red 200-week moving average and the 20-week moving average here in purple. And you can see, especially the 200-week, there's been a lot of interaction between price and that moving average. So it is a big deal. Let's go here to the daily data points. Here we have some other big deal moving averages. The 50-day moving average is very clearly a surgical resistance level here in green. And the blue 100-day moving average is also a rather surgical support level. So price action is currently getting completely squeezed between these moving averages, and so there will be some resolution for sure. Looking at RSI as well, let's look at it. Yeah, we do see some interesting relationships here. It doesn't like to be overbought or oversold. That's very interesting. That is a tradable observation. Recently, there's actually been a positive 83% correlation with S&P 500. So there's a rather big difference between the long-term correlation and the current one. But the many correlations, they became really messed up after the lockdown. But given that the lockdown was a shock to the system, it is an anomaly. That's something you need to, of course, take into account when you are trading. When we look at the daily data points, you could also make the case that we do have a bit of a messy rounding bottom potentially as well. So basically, taking the evidence together here, looking at the seasonality, looking at the cycle patterns, looking at the moving averages, a bunch of technical indicators, and also there's some more macro cases you could also make for the euro in a more speculative direction. The key thing about Forex is that it's a zero-sum game though. But yeah, I do lean bullish here. Whatever you do, of course, don't fight the trend, and may the trend be with you.